Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Welcome to Fun with Annuities, the #1 annuity podcast on the planet. I'm your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. I do encourage you to go to theannuityman.com for books and quotes and calculators and schedule calls and all that stuff. But let's get right into the topic today, which is a very timely one. You know, we're at the time of this taping, obviously we're going through COVID and all that nonsense, which is, it's not nonsense, it's pretty scary. And there's a lot of people passing away, and I'm getting a lot of calls about what happens to my annuity if I die. So today's topic is inherited annuities and what are the choices? You know, what are the choices if you are a child or of the owner of the annuity or a spouse? I'm going to go through all of that. Now, before we get started on the details of those choices, and I've really narrowed them down to 3 choices, and I want to give a shout out to my CEO and Director of Operations at The Annuity Man, and you might have spoken with her if you are a client. Her name is Leah. She is fantastic and has forgotten more than most people will ever know about annuities, and she really helped me synopsize this podcast into something that's very easy to digest and understand. So I want to give her the props and the compliment of just being #1, a great CEO for The Annuity Man, but also very knowledgeable and helpful to clients around the country, our client base. But boy, is she a talent, and she's certainly a brain when it comes to annuities. So with that being said, I do want you to, when you think about annuities, I've always said, Chester calls me and says, I hate all annuities, Stan. I mean, that's crazy. Obviously, everyone on the planet already owns an annuity. It's called Social Security. And by the way, it's the best inflation annuity on the planet because the Congress people just vote the increases. There's no actuaries involved. They just vote it. You can't hate all annuities. It's like hating all trucks or hating all restaurants. There's many different types of annuities. There's CD types of annuities. There's income annuities. There's deferred annuities. There's index annuities. There's variable annuities. There's charitable gift annuities. There's all kinds of annuities. But with 10,000 baby boomers hitting age 65 every single day, which I guess is Chapter 2 retirement age, but that's a big number. 10,000 people every day hitting age 65. There's going to be a lot of people just actuarially passing away, and there's going to be a lot of people inheriting annuities. So you might be watching this or listening to this. Obviously, I have a Fun with Annuities YouTube channel that you can watch these podcasts. So if you're listening on, Spotify and Twitter and iTunes and all that, we do film this. And I also have a Stan the Annuity Man YouTube channel that I do product-specific videos on. But what I wanted to cover is with annuities, there's so many different types, and you can have annuities inside of an IRA or outside of an IRA. You can have them in a Roth IRA. And I know I'm going to stop right here because there's so many misinformed, misguided agents and advisors out there that will say or better yet, people that write or comment in newspapers and radio and television that'll say, never put an annuity, and they say annuity as a general term, inside of an IRA. That's absolute garbage, because when you buy an annuity for what it will do, not what it might do. By the way, we're in the Will Do Studios on the Annuity Fun Game, but I always say you buy an annuity for what it will do, not what it might do. Okay, when you're buying it for the contractual guarantees, it's okay to put it inside of an IRA because you're buying the contractual guarantees. You can have lifetime income coming out of an IRA. And oh, by the way, the most recent annuity type that was introduced in 2014, a qualified longevity annuity contract, can only be used inside of an IRA or a qualified account. So enough with that comment of don't put annuities inside of the IRA. It really comes down to what you're trying to achieve with the money. So the contractual guarantees are the same. It's just the taxation of the money when you bring it out. speaking of taxes and our friends at the IRS, and we're talking about inherited annuities and what do you do, what are the choices? When and if you inherit an annuity, and if you're an owner of an annuity, trying to figure out with your beneficiaries and help them understand what to do when you pass away, when your Learjet hits the mountain. That's the way I say pass away. You have to, and I repeat this, you have to hire a CPA or a tax lawyer, someone that's qualified to give tax advice, that's passed the test, that's qualified. Do not take tax advice from anyone else. I'm including myself. Stan the Annuity Man, America's Annuity Agent, licensed in all 50 states, the top agent out here, and I've been doing this for decades and decades and decades. I don't give tax advice because it's an ever-changing landscape. A lot of times there's some state issues that you have to be aware of with all the states, in addition to the changing federal tax landscape. So please, I'm begging you, I'm on film right now with my hands up for the people listen to a podcast. Please find a CPA and tax lawyer. Yes, you need to speak with me to get the specifics of the annuity, what type, etc. And I would encourage you, if you inherited an annuity, or even if you want to do some pre-planning and say, Stan, here's the annuity I have, tell me a little bit about it from the standpoint of what my beneficiaries' choices are. I can do that as well. But the final tax decision has to be between you, the CPA, or you and the tax lawyer, or you, better yet, you, the CPA, and the tax lawyer. Triple stamp, a double stamp, wear the belts and suspenders at the same time, right? So you can have an annuity inside of an IRA or a non-IRA, which means you can inherit an annuity that's in an IRA or not in an IRA. So you have to be aware of that. You have to be aware of all the different types. There's really two primary types of annuities. There's either the annuitized annuities, in other words, those are creating an income stream. To give you a visual, you've ripped the knob off the faucet and the water's flowing. In this case, the income's flowing. That's an annuitized product. So there's no inheriting an annuitized product because it's already an irrevocable contract that's going to do exactly what the contract said, whether it's life only or life with a period certain or life with cash refund or life with installment refund. There's nothing to change. And then there's the deferred annuities, which is kind of what we're talking about today, which is the multi-year guarantee annuities, the fixed indexed annuities, which both are CD products, and then variable annuities, which most of the sales are indexed and variable. I'm not happy with that. It shouldn't be that way, but it is. And most people are inheriting those. So you do need to understand what type of policy you're inheriting, if it's IRA or non-IRA. But let's be clear about one thing. We are going to get down to, all right, what if you're a spouse or what if you're not a spouse? So spousal and non-spousal choices. Let's first talk about spousal choices. So if you're the spouse of someone who passed away and you inherited that annuity and you are the primary beneficiary, the spouse can pretty much do whatever they want. They can take it over. They can do all the choices I'm getting ready to tell you. They can do that. The only caveat is the spouse has to make a decision on what they want to do and notify the carrier. We can help you with that within 1 year of the date of death. So once again, if you're a spouse and you inherit the annuity, you can do whatever you want to with it. You just have to make that choice. If you say, I just want to keep it as is, fine. Or if you want to cash it out, fine. Or if you want to take, the money out in another way, which I'm getting ready to talk about, fine. You just have to tell the annuity company formally, we can help you with that. We can help you. Don't get in the weeds. We can get in the weeds for you. Don't get in the mud. We can get in the mud for you and help you along the way. You just have to tell the annuity company what you want to do 1 year from the date of death. So from the standpoint of spouses, you're in control. I mean, you can do what you want. You just have to inform the annuity company 1 year from the date of death. Now, let's talk about the non-spouses. This is kind of where it gets a little funky, as they say. There's really, it comes down to three primary choices. So you've inherited the annuity. And this is for IRA or non-IRA. Okay, so here's the first choice, lump sum. They die, you want the lump sum. And they'll pay you the lump sum. There's tax ramifications to that. But that's when you talk to your CPA and tax lawyer, right? Nod your head. Exactly. So that's your first choice. Very basic. I want the lump sum. Chester is my dad, and Chester died, and Chester had a $422,000 variable annuity, and the accumulation value was that at the date of death. I want it all. Send me the check. And you're the primary beneficiary. That's going to happen. Now, the second choice you have as a non-spouse beneficiary, non-spousal beneficiary, is you can take that lump sum over a 5-year time period. Why would you do that? You would do that to lessen the tax blow, because there are taxes, but you're saying, okay, instead of me getting the 500,000, let's just say it's let's just say it's $1 million. Let's be optimistic, that you're going to be left $1 million, right? So there's $1 million in the annuity, and you say, you know what? I don't want the $1 million lump sum because I got to pay a lot of taxes on it, but I will take the $200,000 paid for over a 5-year time period, each year over 5 years. You can do that. So that's choice number 2, which is I just want the payments over a 5-year time period. Now, choice number 3 is a little more detailed, so I'm going to go real slow, and I might talk real slow like a Southerner, like I'm from Charlotte, North Carolina area, and I know all my relatives kind of talk like this in the back of their throat. I love that. I can turn that on like a light switch. It's like when I go to the family reunion, it's like, hey, how y'all doing out there? I start talking like that. They're like, what? And then I come back to either Florida or Nevada, and I talk without that accent. It's a skill. Exactly. So let's talk about number 3, non-qualified. And a non-qualified, if you inherited the annuity non-qualified, remember you can take the lump sum, you can take it over 5 years, that lump sum over 5 years. The third choice is you could take an immediate annuity type payment, a lifetime income stream payment over your life expectancy. You could do that. And that could really kind of stretch out that tax blow that you're going to get. So you can do that as well. Now, in an IRA, if you're a non-spouse IRA and you inherit it, you can't take the lifetime income stream, but you can take it over 10 years. That's kind of a new law that just came in. So let's go over those again slowly, because this is really important. And there's a lot of people that are going to be inheriting all of these annuities from Chester and Chesterette and Martha and Faye and all those people, right? You got to know what's available. And for all you annuity owners out there that are worried that your wandering ambiguity beneficiaries can't make that decision, that's what this video and podcast is for. So let's go over again. Number 1, let's go back to the beginning. If you're a spouse, you can do what you want to do. You can continue it. You can do exactly what you want to do. You can lump sum it. You can get a lump sum. You can get it paid out over 5 years. You can continue the policy. It's your call. You can do whatever you want. You just have to let the annuity company know what you're going to do formally, and we can help you with that. But if you're a non-spouse, the 3 choices are lump sum, and this is for IRA or non-IRA, it doesn't matter. Lump sum, choice number 1, give me all the money. I'm going to go buy a Ferrari and a Lamborghini and a Bentley, and I'm going to lease a Learjet. That's what I'm talking about. That's the lump sum. Number 2, I'm not going to do that. I'm going to make payments. I'm going to get that lump sum, but I'm going to split it out and have it paid out over a 5-year time period. You can do that, okay? IRA or non-IRA. But now, here's where it gets a little, we're doing this twice for a reason. Non-qualified, if it's a non-qualified annuity and you inherit it, you can choose, again, lump sum or 5 years, or you can choose to have a lifetime income stream payment, like an immediate annuity. Convert it into that and pay you for the rest of your life, regardless of how long you live. You transfer the risk. The annuity company's on the hook to pay. It's part of your income floor, etc. Now, if you inherit an IRA, annuity inside of an IRA, you can't take the lifetime income stream, but you can take payments over 10 years. Got it? I mean, that's pretty basic, right? So again, we need to be part of that discussion, me and you and me and my staff, because we will help you all along the way. We won't try to sell you anything. If you know anything by now, and you're going to find out if you don't, we don't do that. Yes, we're the top agent. I'm the top agent in the country. We're the top firm in the country, licensed in all 50 states. I'm America's annuity agent, and the reason is I'm brutally factual. This is a place where annuities really are not sold. This is where people come to buy them if it makes sense for them. and if they get all the information and you make your annuity choice on your terms and on your time frame. I always tell people this. There's never an urgency to buy an annuity. The urgency is to understand what you are buying and to make sure that an annuity fits. An annuity doesn't fit for everybody, even though everyone owns one Social Security, but that's kind of forced on you. But not everyone needs an annuity. So just be careful. Now, I always say there's never urgency to buy an annuity, just the urgency to understand what you're buying. The urgency for inheriting an annuity is making that decision within 1 year of the date of death. I mean, that's the only urgency you have. But hopefully, after the grieving process is over and you've kind of processed what's happened, which is tough, man. I've been through it. And having thousands and thousands of clients go through it every week with people, numerous times. We then need to transition to what choice do you want to make? What's your specific situation, et cetera? Are you the spouse? Are you not the spouse, et cetera? So let's go through a couple of key questions that are always kind of asked. When I was putting this podcast together with me and my staff, again, Leah, my CEO and director of operations, was fantastic with this. We came up with some of the top 4 questions that people ask. The first one is, can you cash out of an inherited annuity? So in other words, can you get the lump sum? The answer is yes, but there's tax ramifications for that yes, of which you need to talk to your CPA and tax lawyer. Number 2, can you roll over an inherited annuity? The answer is yes, you can. So let's just say, for example, Martha's the spouse and Chester passed away, and Chester had a variable annuity of which Martha told the annuity company that she was going to just take it over as is, but then made the decision that she wanted to roll it into something else, whether it's a multi-year guarantee annuity, you can do that, okay? But the key is it appropriate and suitable? I think one of the problems in the annuity industry, not everybody, but many times when people inherit annuities or there's kind of money in motion, people are always saying, let's move it, we can do it over here and get a bonus. Never, ever, 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 ever move an annuity for an upfront bonus. That's could be one of the dumbest decisions ever. And any agent that pushes that, well, you get an upfront bonus for signing. Just understand there's no philanthropist at annuity companies that's giving away money, okay? That's part of the overall contractual guarantee, 100 pennies in the dollar. But if you are being pitched to take your inherited IRA and move it, contact me, because you might not want to do that. You might not want to transfer, because when you transfer an annuity, some of the attached benefits, the riders, do not transfer, and you might not want to leave those on the table. Remember, annuity companies have the big buildings on the reason. They sponsor sports stadiums for a reason. They have the big logos on the plane because they don't give anything away. Number 1, they price it all in. And number 2, they make it hard mathematically to get out of the policy, meaning that when you are looking, for example, if you're looking to transfer a inherited annuity to another annuity legally, during the application process, we have to do a side-by-side comparison of the annuity that you're coming from and that you inherited to the annuity that you're going to. And if it's not mathematically in your favor, not the agent's, your favor, then the annuity company won't accept the transfer, thank goodness. And the only way that even can get done is if the applications fill out incorrectly, in quotation marks. So, in most cases, we need to make sure that the goals are in place and that the contractual guarantees of the policy that you inherited aren't higher than what you can get on the street. If they're higher than what you can get on the street contractually, then we have a conversation that needs to take place. Wow, that was number 2. Okay, sorry, that was the second question. Number 3, do I have to pay taxes on an inherited annuity? Yes, and do not allow anybody to tell you otherwise, that they've come up with some idea, flipping this and that and twist and that and moving this and over there and under here and up it. No. The IRS, I know you hate them. I don't. I love them. They're nice people. But trust me on this one. The IRS, there are no loopholes. There are no loopholes. Okay? If the annuity is inside of the IRA, then there's been taxes being deferred, and they're going to want their taxes, the IRS. If it's in a non-IRA, That's a great part about deferred annuities. The growth compounds and grows tax deferred. Once again, the IRS is going to want their cut. So the answer to the question is, do I have to pay taxes on it? Yes, but a lot of it comes down to how you're going to disperse that money. Lump sum, you got to pay taxes, right? Or you take it over 5 years, you can stretch it. Or if it's an IRA, take it over 10 years, you can stretch it. Or if it's non-qualified, non-spousal, you can take a lifetime income stream. It really comes down to that, but you are going to have to pay taxes. I mean, let me be crystal clear about that, and don't let anybody say, well, I got tax-free income strategy. No, you don't. Okay, and there's a lot of shenanigans going out there with people saying it's tax-free income, and it's really kind of a loan, like a loan off a life insurance policy or something like that. So don't fall for that. If it sounds too good to be true, it is every single time. Right? Nod your head. Yes. Fourth question. What is the best thing to do with an inherited annuity? Boy, what a loaded question. That's an agent's dream to get that. Not my dream. It's an agent's dream to get that question because, well, I've just got the perfect scenario for you. I got the perfect product. Remember this. And this is an important question. I'm going to read it again. What is the best thing to do with an inherited annuity? There's no perfect answer, just bad sales pitches, right? Remember my two questions, and if this is the first time you ever listened to Stan the Annuity Man, America's Annuity Agent, I've really simplified this down to two questions. Ask and answer these two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? That's it. That's it. Those are it. What do you want the money to contractually do? And when do you want those contractual guarantees to start? That's it. And if your answer to that is, I want stock market growth, I want to be Gordon Gekko, I want to be a trader, then you do not need an annuity. Never buy an annuity for market growth, regardless of what anyone shows you, tells you, promises you, or says at the Bad Chicken Dinner seminar. Never. Okay? Ever. Period. End of story. Now, the other thing that I've come up with is an easy to remember, that's easy for me to say, remember acronym called PIL. P stands for principal protection. I stands for income for life. L stands for legacy, and the other L stands for long-term care, confinement care. I'll do it again. P stands for principal protection. I stands for income for life. L stands for legacy, and the other L stands for long-term care, confinement care. If you do not need to contractually solve for one or more of those items in the PIL, you do not need an annuity of any type, period. End of story. I mean, it's really that simple. So, what's the best decision for your inherited annuity? It comes down to what you want it to do contractually and when you want those contractual guarantees to start. So if you come to me and say, well, Stan, I really kind of want a reasonable rate of return. Bah, wrong answer. Okay? Be more specific. What's a reasonable rate of return for you? Well, I'd like to get 7-8% guaranteed per year. Bah, dream world. Wake up. It's not going to happen. Okay? That's not what annuities do. Now, there are income riders that grow at that amount, but that's just for income. It's monopoly money. So don't be bamboozled. Remember, if it sounds too good to be true, it is every single time with annuities. So getting back to the original title of the podcast, I digressed a little bit. Inherited annuities, what are your choices? Pretty basic. We'll go over them again. If you're a spouse, you run the show. You can do what you want. You can continue the policy, or you got all the other choices as well. You just have to let the annuity company know 1 year from the date of death. And with non-spouses, you have to let the annuity company know 1 year from the date of death of the owner of the policy. But with non-spouses, you can take the lump sum. You can take the lump sum over a 5-year time period. If it's a non-qualified inherited annuity, non-IRA inherited annuity, you can stretch out those payments kind of on a lifetime income stream. And if it's an IRA inherited annuity, you can stretch out those payments for a maximum of 10 years. And that's just a new law that just came down the pike. So what I would, remember, don't buy the dream, because you're going to own the contractual reality. So be real careful about people pouncing, wanting you to transfer, signing the paperwork quickly and all that stuff. Slow the game down. Go to my site at theannuityman.com and schedule a call with me, 30 minutes. It'll be brutally factual. I'm not going to be your friend. I'm going to be the best advisor on the planet to you. I'm going to be brutal with you, okay, about what your choices are. And if it happens that an annuity works and that we could and should transfer it, then great, we can do that. You become a client. But the bottom line is, we've taken a stance here at the Annuity Man that we're going to help people during this process, because there's a lot of people passing away. COVID's been a wake-up call for a lot of people. There's a lot of people that are inheriting annuities. They don't know what to do. They didn't even know the word annuity until their father or mother passed away, and all of a sudden they got this variable annuities statement staring them in the face. That's where we step in. That's where I step in as America's annuity agent to help you. And just remember that annuities are contracts. There's not one that's better than the other. It's a commodity type product. You buy them like you buy plane tickets. But with inherited annuities, we're not talking about buying. We're talking about making a good decision with what you've inherited, right? So I hope to be a part of that. And I'm glad you've joined me on the Fun with Annuities podcast. These are coming out weekly. And once again, go to my site at theannuityman.com to run your own quotes. We have the best calculators on the planet. You can run them 24/7, 365. You can get my books. I've written a bunch of books. I'll ship you 6 owner's manuals for free under no obligation. And you can schedule a call with me. Yes, me, Stan the Annuity Man, for a 30-minute one-on-one consultation, non-salesy, because I gotta find out who you are first. You might not need an annuity. So with that, thanks for joining me on Fun with Annuities, the #1 annuity podcast on the planet for a reason. It's because we have fun in the Will Do, Not Might Do studios on the Annuity Fun Cam. I'm Stan, the Annuity Man, America's annuity agent. I'll see you next time. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MIGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 annuity owner's manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.